What's up YouTube, it's Todd Orst here with Daisy Tracker, and today I have another small account challenge update. Here I'm looking at SPY, looking at these dips here in the past 2.5 months. They've been relatively muted compared to these dips back here. To me that shows that the overall market is strong. There's just been rotation out of the FANG stocks, big tech, and into some of the other sectors, which in my opinion is healthy. And that does explain a little bit the disconnect between SPY continuing to do well some of these days, even though a lot of the big tickers that we're used to playing are not doing so well. So let's jump over to the portfolio. This is basically on life support at this point. I have $366 in cash, and so $110 basically. $120 of value in these, which means they're basically a long shot. Unless April really picks up, I probably will call the challenge as being a failure for 2021, starting with 1,000. And then I'll probably add 1,500 to get this around 2K and start the challenge over again. I don't know that I loved starting with 1,000. It was very limiting. It did look promising there for a second, and we got up to, what was the 1,400, somewhere in there at the peak? Yeah, 1,400. Then, of course, did not play these past 2 months good at all, and it's very limited in what I could do to mitigate the risk. So this is the first time I start off with that low of an account size. Yeah, so we'll see how it goes. Hopefully April does turn out to be better. But so let's look at plug. That's the 60, and if I recall, that is not even close. Yeah, we're down to 30, and so I'm definitely not going to dump any more money into this position. More than likely, it comes the whole way down here to the 200-day. A lot of stocks have been doing that, so you should be able to get this around 25, which might be a good area. The RSI is way oversold, so I definitely think that plug will have a turnaround here around the 25 area, but that is maybe a more realistic area. Also, I posted on Twitter today, if you look at this red line, the pullback we have here is actually kind of a sane pullback if we were to have stayed on this trajectory and come back down here and come back down here and come back down here, and then just a little bit of a pullback. That to me seems logical and 100% normal to be expected. What was a little bit crazy here is this huge jump up here. So things got too crazy, got too carried away, and then of course couldn't sustain it up here. Obviously we know that now in hindsight. But this is a very common look on a lot of charts I'm seeing where they're coming back down. Most likely 200 will catch this, but of course we'll see. But yeah, that's not going to be a winner. That is what it is. And here we can see I already did roll that once, and so there's really no credit left to roll for a debit. If I could roll for a credit, that I would obviously do that. But at this point, it looks like it's going to be a full loser, which means I will have lost $305. If I go into that, I have a closing order set to try to eke $50 out of it. But right now it's actually trading more than what the spread value is worth. You'll see that sometimes. Usually you can get it to close for $5 flat. But if you need to, sometimes you do have to go as high as 505. In order to get that close. You still want to close it just in case something weird happened where you got assigned on the 60 that you sold, but your 55 didn't exercise or whatever. So, Robinhood's risk management is pretty good at doing that for you. Sometimes too good, but yeah, I would still prefer to close out. Okay, so that is the first position, plug. You can basically write that off. There's no way that's winning, and there's not enough credit to roll that for a credit, and I don't want to waste any more rolling it for a debit. It could be months before we get back up to 60, especially if it goes the whole way down to 25. So Qualcomm, this one again, I have a this one is a rolling order for a $10 debit. And this one I actually haven't rolled before, so I could probably roll that. I don't mind really going down to 150. I don't really want to go below that, which means I could roll it for $22 debit and still be okay. But let's see if that makes any sense. We have the 140 strike is the one we sold. Okay. So we did break this downtrend, this aggressive downtrend, and here this one has already been called by the 200. That's been coming up and pulling the stock up with it, which is good. So if we continue on that, we might see something like that, which puts us around 140 the whole way out here in June. So if I roll this out, these are yeah. So I have it rolled to March. But obviously things do not necessarily behave exactly to a trend line, so there is a potential that we could get a pop-up here, although I would expect 142 to be resistant. As the 50-day comes down here, it will act as resistance, but then it will wedge, and then hopefully it will overcome the 50-day. So yeah, we're not that far away here. You know, at the start of the day, we were 134. So definitely within the realm of possibilities. Let me draw a bit of a channel here for that. So in that case, we could actually see on the top end of the range being around 140 by April expiration. So rolling it out to May could potentially make this a winner. So to me, there's value in giving that some more time to work, even if it is at the expense of some cash. So in conclusion, I will be increasing the debit I'm willing to pay here. Hopefully, though, we can get an update in the next day or two, and you know, it'll roll for a $10 credit. Okay. So yeah, so I will be willing to increase that. So the last position is Tesla again. This one I have a closing order again. Oh no, this one is to roll too. I thought I had changed that to try to get $50 out of it. So that's 780. Okay. Yeah, so it has to get the whole way up here. I think the reason I decided to try to roll that one was because of how volatile it is and how much it can move. So let's delete this line as it's no longer applicable. And let's do something like that. Okay. So again, the upper end of its range is possible to be up here. I mean, I'm not counting on it. That's not likely. But to show you that it could bounce up. Now, this has been support down here in the 550 range. So it could visit down there again. We'll see. Especially with the 200-day coming up again. You know, it's very likely that it, you know, does, let me draw here, something like this, comes down and meets that 200-day average before we get the bounce up. If we did something like that, then we're nowhere close to where we need to be at 785 up here. But it is potential that a couple volatile couple days could get the roll over. And yeah, so I have 10. Let's see. This one we've already rolled, but we still have 170 credits. So again, maybe up to $20 I'd be willing to roll that for. But then again, I'm not willing to accept less than 150 for a spread. I'd rather just let it fail. Okay, so in conclusion, I have medium hopes on the Tesla. I have fairly high hopes that we can still pull the qcom position out, and I have zero hopes that we can pull the plug out. So yeah, so for this plug position, I'll probably set a closing order here to something like 485 or 475 next. Just try to get $25 out of it, and then I'll continue it to adjust it higher and higher and higher until expiration comes, and I just want to get out of the position before it expires. I'm not really too worried about getting exercised before expiration. If it happens before expiration, Robinhood is free to, I said exercise, I meant assigned. If I get assigned on the 60s, then I have no problem exercise in the 55s. It's free. There's no commissions. So I do try to stay away from that on Tastyworks, but 9 times out of 10, if it's at all close, you won't get assigned at all anyway. But this is getting pretty far out. And so, yeah, I'll probably look to close the week of expiration, which I guess is that 2 weeks. Yeah. So anyway, yeah, I think that's basically it. Again, I keep saying this, it's unfortunate, but it is looking more and more like I'll sort of reboot this and start off with $2,000 instead of trying to mess around with 1,000. Let me know how that makes you feel. If you care at all. I think most people would rather see me trading, since I haven't been able to make any trades here. I think people would rather see me trading than sitting here wishing that my $1,000 came back. At the end of the day, I started with $1,000, and if I walk away with 360 kind of, or maybe even 300, we're looking at a total loss of 700 actual dollars. Although if you want to look at it from the peak of $1,400, then I lost $1,000. So you can obviously decide how you want to look at it, but I'll look at it as losing less. Anyway, that's good for tax write-offs. Unfortunate for the account, and hopefully we'll do better next time. All right, let me know if you have any questions. Thanks. Bye.